Good morning everyone, welcome to Morning Markets on Thursday the 5th of March. A number of things that we touched on at our morning meeting today that I'd like to share with you. The first is the ongoing volatility that we're seeing in markets, both in the equity market and in the bond market. What do I mean by that? Well, we've continued to see quite significant moves in the US market, and that's fed into moves in the Asian market. Yesterday we had a very strong day in the US. I think there's a couple of factors that can be attributed to. I think first is something that we've touched on in our Doing More With Your Money podcast, the US elections and the ongoing Democratic primary process. What we saw on Super Tuesday, where 14 states were voting to decide on their nominee for the Democratic primary, was that Joe Biden, previous vice president, actually came out of this very well, winning 8 of the 14 seats. That was something that pollsters had not expected. Should we be surprised at that? Maybe not, given how polls have been in many markets over the past number of years around elections. But actually, why was the market potentially taking that positively? It reduces the likelihood of a straight Bernie Sanders win in the Democratic primary. It introduces more competition into that, with Joe Biden now definitely a key component of that race to the Democratic nomination in July. That fed through into the market, I think, in a number of ways, but we did see healthcare performing very well in the US. That's one of the areas that would have been subject to quite significant change under a Sanders potential victory. Again, this is something that will play out over the coming months and weeks as we move toward that nomination in July, but interesting nonetheless how the market performed yesterday. I think the other things that were supportive of the strength of that US performance yesterday was the ongoing sort of a view of coordination between central bank activity. We saw the central bank in Canada match the US Federal Reserve and reduce interest rates by 50 basis points. We've seen a number of other countries follow suit with that as well. I suppose showing that there is a degree of coordination to how central banks are thinking about facing the challenge. Two other things that suggested more positivity around how the challenge of the coronavirus is being addressed. One, the International Monetary Fund announced a package of support to countries that are being impacted. And we also saw in the US a package of about $8 billion to tackle the coronavirus being approved. So again, supportive of the backdrop and hence the strength in the US equity market. That fed through into Asia overnight, where we did see stronger markets in Asia. What we've seen in Europe today is a slightly weaker start to markets. I think that's attributable just to the ongoing news flow. We've talked about that this will be a volatile period. That continues to be the case. We're also seeing a number of companies come out and say how the coronavirus is impacting their businesses. That's not unexpected, but it is again causing the market to reappraise its forecasts looking forward. With that, I'll stop there. I look forward to speaking to you again tomorrow.